Welcome to the Dynamic CIO Talk Show, where we talk to a diverse set of C-suite people and ask them to share wisdom and knowledge on a whole lot of things pertaining to business, strategy, and of course, tech, which is our primary mission. We understand these are tough times. The year 2020 was unprecedented, and it continues to surprise us even halfway into 2021. The global banking landscape has seen a seismic shift in one last decade with the emergence of digital payments, cryptocurrencies, blockchain technologies, and more. As a country with the second largest population of internet users, India has been quick to adopt to this changing world of financial technologies, or fintechs, so as to say. On top of it all, COVID-19 pandemic has also changed the ways the individuals engage with banking, payment tools, including various fintech services. There are several reasons why this pandemic may have accelerated the adoption of fintech and other digital platforms in payments by consumers and financial institutions. India, as we know, has the highest fintech adoption rate globally. India is amongst the fastest growing fintech markets in the world. The UK and India may be considered global leaders when it comes to adopting the latest financial technologies, which aim to benefit both individual and businesses. And this is according to Mr. Russell, Lord Mayor of the City of London. To discuss this further, we have with us today Mr. Sachin Seth, Partner Digital and Fintech Leader, Ernst & Young. He's a digital fintech and technology transformation thought leader with global experience. And we are here to discuss the heightened importance of digital transformation for the fintech industry. Welcome to the show, Sachin. How are you doing?
Thank you. Thank you, Smruti. Thank you. I'm doing very well. Hope you are doing also well.
Yes, all safe. Thank you so much. So without delay, let's begin our conversation, Sachin. Let me ask you the first question. When the first lockdown was announced, that's around March 2020, companies started recalibrating their technology infra and tried to realign with the phenomenon called the work from home, or the new normal, as we call it. Digitization was a key to business resilience during this period, and the pandemic just accelerated the digital transformation. How do you see this impact for the fintech industry, and what were the important lessons that this industry learned?
Right. Thanks, Smruti. I think very valid point you mentioned that while I think India has been on journey of adoption of fintechs or startups for about, let's say, 5 or 6 years now, but I think this pandemic caught us in a different, totally different situation. And I must say that since last March, the effect of pandemic started coming in. I think from March to April, May, it was still people were still figuring it out that, what would be the impact of this, how long it will last, etc., etc. But immediately, I think most of the businesses took a call that they need to, figure out a ways to basically serve their customers, make their employees be productive, take care of, the business, etc. And as consultant, we had that sort of understanding that, many of the tools and techniques which we have used traditionally to deliver offshore services, we found that some of them were very relevant to also start using them for the Indian context of delivering services, work from home kind of environment or remote work environment, etc. So I think once that started taking, I would say by June or July, most of the businesses sort of stabilized on getting the remote deliveries done of various services, whether it is managing their digital platforms, whether remote infrastructure, whether moving certain services to cloud, etc. And since then, I think it has been a upside curve moving forward. Trying to see where all digital can be utilized, and even regulators' point of view also, I think a lot of support has come for video KYC, video kind of e-signs, etc., etc. And I think that has also helped in digital adoption quite a bit.
Okay. Coming now to the banking industry, which I would love to ask you some questions.
Yeah.
Banking is now basically more of a technology driven business now.
Yeah.
Other than the financial shocks and the repercussions of this pandemic, okay, nothing has actually shaped the industry better, or you can say for the better, the best way, other than developments in the financial technology sector from the technology point of view. What do you think are the growing trends of digitization in the commercial banking side?
Okay. So yeah, that's again a very, very important point. So commercial banking, if you look at it, I mean, it is spanning across, small to medium size business banking kind of thing, corporate banking kind of thing, or kind of basically services which are provided for the business purpose, right? Am I correct? That's what you are
Yes, yes,
telling,
yes.
right? So there we have seen many trends, and I can quote some of the examples also. So traditionally, yes, I think most of the banking was digitized towards the retail banking side, and because there was a B2C kind of model, so most of the banks were spending a lot of money to compete with the fintech players, wallet players, and provide seamless experience. But due to pandemic, there has been a lot of thrust on the commercial banking or business banking side as well. And in fact, as recent as last week's announcements of regulators to allow KYC, digital KYC, or video KYC to be used for commercial banking or the current account onboarding, etc., that has become very, very a progressive step. But other than that, also, if you see, there is a new wave of this neo banks have come up who are supporting many of the banking initiatives to drive the banking ecosystem in small and medium enterprises or corporates, right? And there we are seeing a lot of initiatives are being done. Most of the leading banks are running initiatives in commercial banking side also, using a lot of fintechs. Even some of the public sector banks have also come up. Government also, or CDB also, has run many programs to ensure that whether it was a lending moratorium, restructuring of the loans, credit guarantee schemes. So all this which was launched by government during this pandemic period for the business, various kind and size of businesses, they were all primarily delivered digitally, because it was very difficult to actually deliver them through typical branch model, etc., because most of the branches were not fully operating, or there were rostering happening, and even customers were shying away from coming to the branch, right? So I think
Correct.
it has been a quite, I would say, upswing, and I see that in last 3 to 4 months, a lot of confidence in the businesses, in the banks. A lot of budgets I see being aligned towards corporate banking, business banking, commercial banking, to basically drive the digital agenda and take it beyond the relationship manager driven banking to a digital kind of assisted banking. Yeah.
Okay. Yeah, you're right. I think, I mean, all of us were still and are still very, apprehensive of stepping out of the house or going to any place like a bank, or even though it's
Right.
very important.
Right.
Correct.
Absolutely.
Uh, okay. So now that you said all of this, now everything is becoming much more advanced. Things like UK have started opening up with almost everybody getting a vaccine.
Yeah.
Okay. Fintech companies have a bigger chance to solidify their positions.
Yeah.
So how is fintech benefiting from this current churn and the shifts in way, how we are transacting, like we as consumers, there are shifts, right, in the ways we transact. So how is fintech benefiting from this current churn and the shift?
Yeah. Yes, absolutely. I think that's also an interesting point of view. So, as part of our initiatives, we keep talking to a lot of fintech players on a weekly basis. And last 1 or 2 months, with whatever interactions I've had, I'll tell you that couple of types of fintechs who have given us a feedback that there has been a huge uplift in their business. So wherever the fintechs are involved into the customer onboarding, video KYC, using AI ML for various kind of validations, fraud detection. A lot of fintechs are being used by most of the banks to create a solution. So any solution which is being created by the banks today, where there is a customer onboarding involved, whether it's a merchant onboarding, whether it's a retail customer onboarding, or it's a corporate onboarding, there is a definite involvement of a fintech. Okay, traditionally it was not there as much, because traditionally
Correct.
the forms were sort of signed by the people, and banks were able to send them to their back office center and get it processed. But now that luxury doesn't exist, right? So that is one part. Also on the use of data for artificial intelligence, for customer behavior, for cross sale, upsell, giving offers to customer for the right relevant stuff. There again, good amount of fintech uses are happening. Even in credit management, lending, etc. Also, though there has been a slight downturn in the first 6 to 9 months of the COVID period, because loans were not being taken as much as because the businesses were not really active. But I think in this last part of the COVID, uh, you know, most of the customers have changed their underwriting policies, and they are using a lot of fintechs and surrogate data, which is basically has become the backbone. because they are not really in a position to really meet the customer or physically verify the customer in various situations, and that has become pretty good. So I must say, 60 to 70% type of fintechs are getting benefit from all this scenario, because if you see their, it is reflecting in their valuations also. It is also reflecting in their customer acquisition, their monthly run rate, etc. Yes, there are 20 to 30 fintechs who were directly into the B2C space, and they were like more like lending the money to consumers, etc. Some of them have also had a negative impact because of collections issues and things like that. Yeah. And another point I want to mention is that most of the Indian fintechs I did not see prior to pandemic so much being able to drive the business or think beyond India. Okay, but during this last 13 14 months of pandemic, we have seen a lot of unicorns coming out in terms of valuations, fundraise, etc. And we are seeing that at least 10 to 12 major fintechs have expanded their base into the Middle East, Southeast Asia, and other countries also, because they found that there's a good amount of pockets available where Indian fintechs are able to uh, tap that kind of business opportunity, which in normal course would not have been possible, because in those countries also adoption of digital was not as high. Yeah. So that's something I want to
Adoption
highlight.
of digital does have a lot of benefits.
Yeah, absolutely, absolutely.
Obviously, with the benefits comes, it's the other side of the coin is still there.
Yeah, yeah,
Coin has
true,
two
very
sides.
much.
So what I mean, you spoke about data. Just what you said. I think one of the con could be a data breach or cyber security, as we call it.
Yeah.
If that is, you are an expert, so you would know this better. But what are the other cons that you can, or the disadvantages that you can see, or maybe people should be aware about? Or obviously, they are already experiencing it, but if you could throw some light on the disadvantages.
Yeah. So if you see the disadvantages or the impacts or cons on the fintech community, first and foremost, before the data and cyber part, which is obviously very important and it is impacting everyone. I mean, there has been various reports coming out, data leakages, data impact has happened on domestic companies, on international companies. But I would say first and foremost is that many of the fintechs who were not still stabilized and were in the early stage before the pandemic hit, many of them actually really also got severe impact of that, because they were not in a position to maintain their cash flow, maintain their client pipeline of the orders, etc. And we have also seen that a lot of fintechs have really gone out of the business, or really doing not so well, because they have not been able to sort of stabilize themselves because they were too early in the game, right?
Okay.
Because they didn't expect this could hit them, right? And so there, because customers also became choosy, and they also were looking for the players who are already established instead of trying to experiment with the new ones.
New ones.
And the relationship angle also went off, because when the banks senior management or others are not available, you can't really go and explain them. Everything has to be through Zoom call. So the sales part of the fintechs have really been impacted. Those who already were successful, they have become more successful. Those who were in the early stage, they are basically having a little bit of a challenge. On the cyber security side, obviously, I guess it is quite a, I would say, challenging period, because when the crisis comes, I think people who have a criminal mindset also become more active, right? And that is what has happened when cyber, all the people who are, uh, you know, creating unnecessary issues related to data, etc. I mean, every second day, third day, you realize that either a fintech or or any tech startup company, or basically any of the financial institution, data is being compromised, data is being available on dark web, or etc, etc. So I think and because not everybody is operating in the environment of the office of financial services or fintech today, vulnerability levels are very high. And I think most of the customers are very concerned about it. They have already started investing heavily into the cyber security, with modern tools, SOC, using various kind of mechanisms, etc. And I see it's only going up, because it's one thing where people have realized that there is no choice they have here.
It comes with, everything comes with their own disadvantages and
Yeah,
advantages.
right.
Sachin, I was just reading through, there was a report which was, cited by LiveMint, okay, which spoke about some fintech sector. Since I was going to have a conversation with you, I just thought of reading it, and where it said that the fintech sector in India is expected to grow at around $150 billion during the next 5 years. And in order to realize its potential, the fintech sector in India will require about $25 billion of investments. Where do you think most of these investments will go? Will the share, and what share of this investment will be in the tech and the skills?
Right. Okay. No, I think looks, while I'm really not expert to comment on the size and scale, but yeah, looks in the right direction. Now, whether it is 150 billion or 100 billion, to be very frank, the debate is really not, value, because if it reaches 100, it will reach 150 also, right? And as far as the investment is concerned, $25 billion, I think a couple of $1 billion already has been invested. There are some big deals going on. You might have seen that some of the companies recently have, whether it's Razorpay or Pine Labs or some of the others, have really gone multi-billion valuations, and for the right reasons, because the kind of impact they have made on the whole ecosystem has been phenomenal, right? Yeah. Now the point comes is that if the more and more money is coming, which is absolutely coming, I do see, I interact with fintechs, investment bankers, and private equity players very often, and there's always people looking out for better deal, for better investment opportunity. Uh, I would say most of the money is going into the space wherein scale can be created. So people are putting money wherein the large scale can be created. Everybody is looking for a large market, and obviously the money is mostly going into the technology. Now, technology has typically two components. It's the skills of the people which you hire, the best of the talent, and second is basically the kind of money you will put into infrastructure, whether it's cloud, whether it is some kind of softwares, whether it's building the technology, etc., etc. So I think these are the two primary. Obviously, some of them are spending in the brand building as well, but I would say most of the B2B fintechs are spending on the people skills and the technology. The B2C ones are also spending on the brand to build the customer confidence and acquire more and more customers. But yes, whatever numbers are quoted by any publication, I would say, at the moment it's anybody's guess, because there is a huge opportunity, obviously, and some of almost 10 players have already proved their opportunity is very high, and probably there are 100 more in the pipeline to sort of take it forward.
Okay. Great. I think this was very valid, the way you explained it. I will now want to ask you a little technical question.
Sure.
When I say technical, when you hear of digital transformation, a layman will talk about, oh, what is AI, ML, MI, and IA, API, etc. So when we talk about API, how do APIs drive this digital transformation?
Yeah, that's the most favorite topic of mine, actually. I think, I don't know how you have hit on that, but that's like my passion. Okay. So, in fact, I've been talking about this in various forums and also engaging with various players. So in a simplistic term, if I have to explain a layman that what exactly the API is, I'll try to do that. So, if you look at today, our life is using the financial ecosystem or any ecosystem as a part of the overall lifestyle. So if we order anything on Amazon, eventually we go to the app wherein either we take the credit card EMI or we basically make the payments, and then we get the product delivered, we do the product return. If we do the product return, again the money comes back to us. If we are using a credit card, we get the reward points for that. If we use the reward points, we get again something for that. So see, if you see, this whole chain is there, right? And now this chain can be in various ways. This can be between e-commerce and banking. This can be between banking and insurance. This can be between insurance and Uber. It can be between Uber and something else, or Healthify. So, you all see all these digital assets, what we are seeing. And I'm not talking about only fintech. I mean, there are so many digital assets which are around the ecosystem of fintech, because fintech is an underlying layer for all this, right?
Correct.
Now, API is basically, in a definition point of view, it's an application programmable interface, but basically it is a wiring, which is basically between the different apps to conduct this kind of transactions, what we do. So if we click on it and we take a EMI from credit card, it will click and it will basically take it will pull the my data and put it into the credit card bucket, or it will at least show to credit card bucket that here is Sachin Seth who is wanting to have financing for this 2,000 rupees worth of product which is being purchased. And then the validation will be done whether I'm eligible for it or not, whether I'm good enough to really repay it or not. And then it will respond back saying that, okay, allowed or not allowed, right? Give it, not give it, whatever, give it with this interest. So this whole communication happening between the various digital channels. It could be within the one channel, which is like I'm transferring the money to you or you are transferring to someone else. So this is an instruction being passed. So basically, it's a request and response mechanism, right? So if I make a request, what is the response of that, right? And so basically, this is a wiring done across the applications, and so that this request and response can be that message can be transmitted. Now that's basically the API is in a layman's language, right? Now, obviously, it's a
You made
technical
it
term.
sound very simple.
Well, it is very simple. It is very simple, and but yes, there is a business being created on APIs and open APIs and API infrastructure layers, API gateways, which means that companies are creating this uh, you know uh, wiring or piping in such a way that if I create, here is my wire, right? If anybody wants to take this kind of thing, please connect to this wire, right? If you want to, I maybe if I simplified, let's say in olden days in television, we used to have red, blue, green, different wires, right? For the audio, video, and stuff like that, right? So it's like that. Okay, I've connected three wires. Now anybody wants audio can take from here. Anybody wants video can take from here. But obviously, it's more complex than that. That within that, what will transmit, when will transmit, how it will transmit, etc. Log trail of that. That whether Sachin said ask this transaction or Smruti asked this transaction, right? Whether the my authentication is correct or not. So all this is like any other validation in any of the technology, right? But APIs, what they are able to do is they are able to pass on the messages between one software to another software. And that's why we see so simply, I mean, if you see, life has become like very different in the last 5-10 years, that you have one app, you are using that app for so many things. And you are ordering, you are buying, you are taking finance, you are taking insurance, you are taking so many things. And that is exactly what the API's role is underlying. And that is what is becoming more and more powerful. And obviously, there are different layers of that. There's a technical layer, there's a business layer, etc. But that is something which is what making life, in a simplistic term, for a business person, that's all you need to know. The rest all that
Yes.
things can be done by the coders, that what field to go, whether 5 field will go to the application or 3 fields will go to the application. It's not really the area for business people to really get into. Yeah.
I think you made it really, really sound very simple. When I actually was reading about it, I was thinking to ask
I think
you
it is
as
simple.
well,
People have made it
wondering how
complex.
will I comprehend it? Yeah, maybe like that. Okay, last question. I won't take much of your time. Digitization, is, how the way the pandemic is going, we don't know how it is, and what will be the future. However, we all wish that things should not, things should be better from going forward now. But digitization will shift gears as we move ahead, post pandemic as well. What, according to you, will be some of the changes that the industry digital leaders shall anticipate, and how should they be prepared?
Yeah. Well, obviously, difficult for me to predict too long, because right now we are not able to predict that how long we will continue to wear the mask and we will continue to be pandemic. But assuming that there will be better control of the situation 6 months from now, uh, I would say that whatever adoption of digital has happened, that is not going to go away, because people have got used to doing transaction at a much lower cost, in a much more efficient manner. That's not going to go away. But what I'm definitely sensing is that there are a lot of digital models will emerge. And in fact, without disclosing the name of the clients because of confidentiality reasons, already I have so many requests from clients where clients are traditional brick and mortar players. They are very successful in their domain. They could be saloon chain, they could be a tea company, they could be a consumer product company, they could be an auto company, and all of them either have done some amount of digital adoption or digitization already, because otherwise their business would have come to a standstill in last 12, 13 months. But I think all of them are under discussion to see that that when pandemic actually comes in control, how they are able to compete with these fully digital companies and in a better way, right? Because these players who are traditional players, they also have physical outlets, they have physical setups, they have physical. So even if you talk about healthcare companies, uh, you know, uh, there are hospitals, there are clinics, there are labs, but today we have telemedicine being used very effectively, right? Now, are we going to see only companies who will have a telemedicine as a only tool, or is there a potential for a hospital to modernize itself and provide a hybrid and omni-channel model, right? So if I need to do a follow-on consultation just to show my report, I can do telemedicine because the doctor doesn't need to really take my blood pressure or hold my pulse or put a stethoscope to check whether I have any congestion. Then in that case, physical meeting is not required because I'm just discussing my reports parameters which doctor has advised me to take that report, right? But in traditional times, if you see, we all used to even go to hospital and show the report also. For that also, we had to take appointment and we had to wait in line to reach to the right doctor, and it would have been just 5 minutes of conversation, right?
Correct.
But today, I think so it will be a hybrid model. So right now, like I said, I mean, 4 or 5, 6 initiatives which I've been working on, where whether it's a banking, whether it's a healthcare, whether it's a wellness, whether it's consumer products, most of the people are talking about hybrid models, phygital models, what we call them. And I see the huge wave of those coming 6 months down the line because
The
most of the legacy
phygital
companies.
models, just
Yeah.
adding to what you said, the phygital models are just not restricted to a manufacturing sector or anything like that. It
No.
is any sector,
Yeah. So
like
I'm
the
saying, yeah.
example
Yeah.
you gave of a hospital.
Yeah. So even I'm saying, if you take whether it's like a healthcare or a wellness or a food or anything, what is happening is that people are moving to omni-channel model. See, omni-channel was traditionally, if you see 10 years back, we used to talk about omni-channel mostly in banking. We used to say that, okay, or retail, right? That we will, omni-channel by banking because there is a ATM, there is a branch, there is a mobile app, there is a web channel, there is a call center, IVR, right? Whatever. So there are 8, 9 channels, right? And there is a relationship manager who can come to your home and do the work, right? So you have 8, 9 channels. Now, when we went to retail, we again talked about omni-channel a little bit because then the question was that there is a retail store, there is an online delivery, there is, pickup you can do at the store, right? So now, but if you see whatever as a part of our consulting thought process and leadership, whatever I work with most of the clients, today I'm seeing convergence of industries coming together and utilizing infrastructure of each other as well as their own infrastructure and merging it with the digital in a very, very seamless manner. And that is going to be a very, very powerful differentiation. So today, when we see 100% digital companies in pandemic, let me tell you, some of these companies will get disrupted because there are traditional companies who are now, putting together their strategy to be able to provide as good as digital experience as the pure digital companies are providing. But there will be also a place where you will go and once in a while and engage with somebody, which in case of pure play digital companies, you are not going to have it. And
Even
that's
I
going to be
think,
the differentiation.
even in India, I think maybe it's India or I don't know about other countries. I don't have a research or anything. But I think still in India, that concept of I would want to go to that store, I want to have that physical. I'm very open to digital, but once in a while, I would want that physical to be there. I don't want only digital to be there. Maybe I don't know. I may be
Yeah.
wrong.
So no, sometimes it is the aspiration of a person or a person's, I would say, way of working or thinking or doing. But many times it's a need also. So today, if I give you just some examples, and I'm not saying that I'm associated with any of them, but if I'm as a consumer, if you see Lens Card, if you see Carrot Lane, if you see some of these brands have actually created a phygital models wherein they have, so you can do up to whatever you want up to online. But if you feel that you want to complete the journey only by maybe you have selected 5 glasses online, but you still want to go to the store and select one, right? So you can go and do that. But next time, you want to order something which is very trivial, right? I mean, you not a very expensive goggle, and just you want some as a additional just for sake of another, change of style. Probably you can order online because there is enough tools provided online wherein you can look at that on the 3D AR VR
And
kind
see
of
how you're looking.
yeah,
Yeah.
Yeah. So basically, I think most of the time we go to the store to validate the quality or the perfection of the service what we are looking for. Once we get used to that quality, we are used to also ordering online 100%, right? And that's why many times the pure play digital models have worked or not worked because of the assurance of quality, right? And this is where I think a lot of traditional players are coming back, and I do see good blend of this. And I think pandemic right now is not able to allow them to do it because their stores are not open or not functional, or they don't have manpower to do it. But I see 6 to 9 months in all kind of businesses, including financial services or non-financial services. I think digital models will be the best ones.
Thank you so much, Sachin, for all of this. I mean, it really has enlightened a lot of the knowledge on the fintech sector and outside fintech also in terms of digital transformation and things like API, etc. So, on behalf of Dynamic CIO, I would like to thank you for your time and your inputs, and I hope to see you again.
Thank you, Smruti. Thank you so much.
Thank you
It was
so much.
wonderful, and thank you for this opportunity. Thank you.
Thank you.